So, this video I want to go over my portfolio a little bit. I kind of talk about this in like every video, but I don't really go in depth. And some people have been asking me, since there are a lot of new people on the channel too, like why do I own some of these stocks, and I guess what is my thought process behind them. So what I'm going to do is I'm just going to talk about each stock individually and tell you guys the percentage of the portfolio it is, like total, or in comparison to it. So like for example, right now, what I'm going to do is I'm going to take like Friday's close, today's Monday morning, I'm going to do it before market opens, this way I have like easy numbers to work with, so it doesn't keep changing. So for example, like my cash is, I'm gonna do a little rounding just to save some time. Got a calculator nearby. Let's see. I only have 7% cash. Is that right? Oh man, that's just very, very little. I should probably raise my cash a lot more. Yeah, I'm only at 7% cash. That's pretty weak usually for me. I'd like to keep it like 15% just in case. But I guess we do have a lot of positions right now. So like for example, CCJ. I'm just gonna take how many shares I have that I'm gonna keep classified. And I'm gonna multiply it by the like Friday's number of like what it kind of closed at. So it's like 1641. Then divide that. Wow, this position is pretty small. And then divide that by the total balance of the portfolio. So right now CCJ only makes up about 3.3% of the portfolio, so about 3%. Not a big position. So why is CCJ in this? So this is Cameo Corp. This is a uranium company. And let's see if I can go down to a better chart. I like the uranium sector. I don't love it, but I like it because URA, yeah. It really, since, I mean, you could just get a bigger time frame. Let's go to the max. These are monthly candles. You know, this is the pandemic. Uranium hit like $7 on this ETF. But like, we'll just take before the pandemic, you know. So it's up like 70% uranium. Kind of looking like it's getting some weakness. Yeah, like around this. Some weakness, but on the grand scheme of things, I think uranium could get a big pop. This isn't, or not a big pop, but I think over time it's just such a undervalued energy source in my opinion, and it's a lot cleaner than natural gas, oil, and all that stuff. And it's again uranium, so it's very dense and concentrated energy source, or just an element. So I think this is going to have a lot of good potential in the future. Now, obviously there's the dangers with uranium, like the nuclear explosions and stuff, but I think in the grand scheme of things, it's a better energy source, at least for green energy, and the amount you can get for it because how dense it is. This isn't the best chart to look at because obviously it started all the way up here. Uranium did have a big spike in 2011, but yeah, it's like not like an anomaly, but they decided to create this ETF at when uranium was really good. So this looks really bad, but you just gotta look at the uranium from like the last 100 years or maybe 80 years. This is only like 10. I don't have that future. I don't know if it's like a thing, but yeah, I couldn't find it. I do like uranium. So back when 2000, yeah, see, or just this company could become much more profitable if the price of uranium goes up. That's kind of my thesis or idea for a lot of stocks in the portfolio. I think the underlying commodity is kind of cheap. I think it'll go up. So I buy a company that is kind of large but profitable at a certain price of the commodity. And I just hope that the commodity price goes up so they make more money, and then it's like a leverage position because I guess of how it works. Because if they sell, let's say they sell uranium at like $10, I don't know, or they make money when uranium $11, right? They make that extra $1, but if it goes up to like $20, they're making like $10 on that. So it's like 2 times how much money they're actually making. So it's kind of like it's leveraged. I don't remember the exact numbers when these companies make money. It's been a while since I looked it up. I usually should have it in like an Excel spreadsheet, but I don't remember. Anyway, that's uranium. I'm kind of looking for it to go back down to here. This is my big uranium play. I mean, I'm also looking at NXC is a smaller company. I was looking at this $2.75 range, and I was like, oh, it's too expensive. It should go down to retest, but it never did. So I just gotta be cautious with these. Like, they just sometimes don't retest. I mean, it's still good, but definitely looking weak at the $4 level. But yeah, I think I'm just gonna stick with CCJ. Just add if it dips. I do hope, again, these are monthly candles, big time frame. I do hope it does come down to 13, but if it doesn't, I think I should get 5%. If it goes down the year, maybe I'll make it like 7-8% of the portfolio, but yeah, that's that for now. Disney's got a bigger position. Let's do the quick maths right now. 183. Disney's 11% of the portfolio. I just like the company. If I could buy one company and never know the price, and probably sell like 30, 40 years from now, it'd be Disney. I just like their platforms, I like their parks, I like their customer loyalty. Very hard to get to that level of loyalty in customers where they just buy like everything. They have exclusive content on their Disney Plus platform, which is like, I can't explain how I think powerful that is for this type of company to have that type of platform with that type of loyalty customer. It's just I think that'll grow the Disney Plus specifically a lot in customer or subscriber growth. But again, it's just the company itself. I think this is the king of entertainment. That's why I have that. I'm kind of just adding here and there. I think 15% would be the highest amount I'd have this company. Just to keep things a little bit in check, but yeah, 11% we're fine. Next we have EMX. Let's see the percentage. This is 8.7%. This is mostly a gold royalty company. So they act as like a bank kind of to gold miners. They say, hey, we'll invest in your mine, we'll help you explore, we'll give you money. In return, you give us a percentage of that like asset over a certain life cycle period, maybe like 30 years, 20 years, depends. I like this because their management team is very smart. You can watch some interviews online. I think the guy's name is Dave. That's kind of ringing a bell, but the way he conducts himself and makes investments, to me, is intelligent. And I just like the royalty space. The main thing is if gold, which I'm anticipating it to go up, and price does go up, these companies make a lot of money because their initial investment is just going to be that much more, and then they get a percentage of how much money they're making, or the other companies making from the gold. Also, you can see something interesting, right? So this is back from June to now. That's like 6 months, yeah, almost a whole year actually. It barely moved in price. If you take a look at gold since June, we're kind of down like 6%, maybe more, because we had that like little spike. I think this is definitely a smaller company. I don't remember the market cap, but it's small. I think you can just kind of gauge how investors are thinking, despite gold price going down. I mean, it's not that much, but it's still a pretty good amount, especially from the high. Let's say 13%, 15%. A company like this, a smaller EMX, a small company, barely moved. usually these companies have a lot more volatility. I think if you check, what is it, MTA, yeah, this is a gold miner, there's a royalty as well. A lot more spikes, but also just almost flat. This actually kind of looks like it might break down, but I think you could just take a look at like investor sentiment with these, or with this price action, and say that they're, even though gold is going down, they like the companies because these should be in theory more volatile. So my theory, again, similarly to uranium, is gold will go up to higher levels. We did get kind of like a double bottom, a little bit of a higher low, very little bit. I think it's gonna fade down a little bit just because we're at this 1800 level. Hopefully it'll catch and go up, but I've been saying that for a while, even back here. So I'm kind of patient, but I also don't want to be too patient on a decision that might make me lose money, but I think in time it'll be fine. This is again still like a 1 year time frame. Like if we go to weeklies, like gold's still looking strong. Like that's 50% since let's see, beginning of 2019. 50%, we're still up like 38%. So on that 1 year time frame, yeah, it looks bad. But on the grand scheme of things, like, it's all about the time frames. We're in this big like cup and handle pattern. Hopefully, I thought it was gonna catch up here, but yeah. So let's see. Yeah, let's go to HITIF. This is a penny stock. This is a weed penny stock. They're based in like Canada. I'm gonna estimate a little bit here. Yeah, this is a pretty small position. This is 38.75% of my portfolio. I like the company. I think it definitely will grow. I did buy when it was up like 100 something percent in a couple days or a couple months, but I think long term I like the company. Hopefully they'll make their way into the US market space, because right now I think they're only in Canada. They have some stores. They're focusing on like brick and mortar stores, but they also have a couple online websites where they sell stuff. So I just think it's a small company. The weed space is gonna grow. I kind of wanted a company that they actually made money or like 2 quarters. They didn't make a lot of money, and they didn't make money. I didn't necessarily go super deep into like their income statement, so I don't know exactly where the money was pulled from, but they did make some money. I like the space in weed. Give it some time. I think it'll be profitable. This company should grow, so we'll see what happens in the long run. I'm not really looking to sell this for a while. If this thing goes up like 100%, I'd probably sell some, because that's just the like smart thing to do. But we'll see. KL is a Kirkland gold. This is another gold miner. This is not a gold royalty, so it's different than EMX. I have this because I again like the company. They make a lot of money. They have like no debt. Their dividend, they keep increasing it very rapidly. They did get hit pretty hard. This is, let's see, I did cut this position a lot. I cut it in like 70, or not 70, like 25% back here. Literally the worst time. And then I had to buy some back here, but I did get that tax advantage, I guess. Just how it happened. I wanted to preserve some stuff. Yeah, right now this is like almost 9% of the portfolio. One point it was like 15. But that was like when it was up here, obviously, when it costed more, or was more expensive per share, yeah. But yeah, again, we're just playing the gold. I think it'll be profitable. This company is just a pretty small company too, so it's not on everybody's radar. But yeah, I think it's a solid company. Definitely my favorite gold miner right now, or just gold investment. I like like it more than EMX, but it does something differently than EMX. That's why it's so much more volatile, because it's a different type of company. Next we have Mag Silver. This is just like EMX, except they mostly only deal with silver mines. That's their main focus. And let's see, this is 12% of the portfolio. I do have, right now, what is it? Like a 10% gain in it, but I do like this company a lot. It's a very small management team. I think it's like a $2 or $3 billion company too. So again, it's just really smart people making educated decisions, and that's what I like. And I expect the silver commodities price to also increase because it has a relationship with gold. It is up a lot. We did have to have some big pullback period, but really that $23, like 24, is not breaking down. On the grand scheme of things, we gotta remember, like, these are monthly candles, like this explosive price movement. So I'm kind of hoping if it does happen again and spike up, I'll be a part of that. I mean, it already did. Like, we had these massive gains. I think, yeah, I had like an 80-90% silver trade. Because I was buying it literally when it was like, wait a minute, that doesn't make any sense. Let me see something. Oh, I'm looking at, okay, yeah, this is the future. I was looking, or when I buy it, yeah, the ETF SLV went down to like $7 because this is the thing I could buy. No, it didn't go down to 7, I guess 11. Why did I think it went down to 7? Yeah, but I was buying literally these days because I was like, is this happening? Yeah, it's a pretty good trade. Where's I going with this? Yeah, I just like the silver space still. So, I wanted to be in the royalty space specifically. I did have AG for a while, but we had these big spikes, and it was just like, let me just take the profit. But, yeah, I like Mag. Solid company. Probably my second favorite metal type of stock or company. Go KL, Mag, probably EMX, but let's just do NEM real quick. I'm gonna skip. NEM's a little bit bigger, or like one of the larger gold miners, much bigger than KL. This is 11.5%. We did have some big run up too. But yeah, big gold miner, aggressively raising the dividend as well. Take a look at the big time frames. We are in the upper side to it. But yeah, this company's been around for a while. It's pretty large. They know what they're doing. It's just very not stable, but they've just seen a lot of stuff. So that's why I have this as more of a stable gold miner in case, actually that is what happened. KL got hit really hard. If I had all my money in KL, in the gold mining space, I would have got hit really hard and been super sad. But because NEM's a little bit less volatile, because of the larger market cap and I guess more stable, I don't know, people just have, this NEM and gold or GOLD are like the biggest paragold, like the biggest miners. So it's kind of just how the market sees it too. This is more stable than KL, so but yeah, kind of happy I did this. Right now I'm up a lot in this, down a lot in KL though. But yeah, again, we're just playing that gold price going up on a larger time frame. So that's it for that. Alright, and oh my gosh, 3M. I was gonna say M&Ms. 3M. This is a pretty big position in my portfolio. Let me get a number for you. Oh, it's at $200 now. Jeez. Whoops. This is 12% of the portfolio. I have this because it's an incredibly stable company. They have so many different business segments. Like business to business, but also business to consumer, B2C. They have a lot of different products and a lot of different markets. I thought it was just a great company. The dividend when I was buying it was 3.5, which was like non-existent for the last 5 to 10 years. also in this big downward channel. I would think I was buying like here, yeah. These days. It did hit that big spike down, but then a buy up, and then now it finally kind of broke out of this like downward channel it had from back from 2018, so like a 2-year, 3-year channel. So I thought it was a good power play that it eventually would break out, but also I wanted a well-diversified just company with a decent yield. They've been paying their dividends for like over 100 years, and they've been consecutively raising it as well. They did only raise it 1 penny this year, but it's okay. They've been increasing it a lot more. Like it was at a couple years ago, it was 117. Yeah, I think this is just a good power play move for like multi-year. So this is kind of like core in the core position in the portfolio, just to keep it stable. In case something like stupid happens, at least I'm getting a decent dividend in a good company that should continually pay and raise dividends over their earnings or tomorrow morning too. Cool. Let's see what happens. Yeah, that's why I got this. I probably should have more companies like this in the portfolio, but there's so much opportunity, in my opinion, in the like commodity space to make money. So that's why I'm doing that. Space right now, or SPCE, is just the one trade I have on. It's kind of a larger position than I would like it to be. But yeah, it's 6%, 6.1% of the portfolio. This is the only really short-term thing. Everything we just went through is kind of like a longer to mid-term. I'm talking like a few months to a year. Things like 3M and Disney, that they can stay in for decades maybe. I'm not too sure, but I just don't want to touch those and do something stupid with the money. Unless if they get really extended and I feel the need to take some profit, just because, you can't be too greedy. You gotta take some off the table sometimes. But yeah, so this is one trade we have on. Kind of losing money right now. I think I'm down. I'm actually not down that much at all. I kind of bounced back because it hit this trend line, but yeah, seeing where it goes. Trying to make a little money here and there and dumb decisions. I try to have like one of these trades a week, maybe 2 weeks I'll hold it. But yeah, I haven't been doing too good with just like swing trading, so probably gonna take a little break. But yeah, that's why this is in the portfolio. Next up is Verizon. I noticed, Verizon on this big time frame. These are all weekly candles. I'm kind of watching this trend line and got this resistance up here. I mean, yeah, that's all fine and dandy, but I'm also looking at, I could buy, I think I bought it at 55, yeah, 55 bucks. Looking at this, I can buy this company for, oops, what am I doing? For like 55 bucks, get this 4.5 or something % dividend yield. Like, that just seems, and it's Verizon too, like they're so well established. This is 4.3% of the portfolio. I definitely want to increase this, but it doesn't really do much. But it's kind of just a good, like a base, in my opinion, to have in a portfolio because of the lack of movement. This is the dot-com bubble up here. This is the recession. What is this? Just 15 something. This is the pandemic, like, and I guess it did go down like 17%, but it just, from a technical point of view, it looks pretty good, but they do have a big dividend. So like right now, let's see the dividend times 4 divided by, I would do 57.3 if you bought it right now. 4.38%. They don't increase it too rapidly, but very stable. I think their, payout ratio is like 30-40%. It's just a healthy company giving out good dividends. Again, the infrastructure they have and the customer base, powerful. It's kind of hard to get rid of that. I mean, it's probably not going to grow. You're not going to make $1 million from this. But you will park your money into a company that has a safe dividend and probably shouldn't collapse, like again, it looks pretty strong to me. Yeah, increased this maybe like 7% or 5%. What did I say it was? I think I said it was like 3%, right? Let's see, I should increase it to at least 5. But yeah, anyway, that's why that's in here. Next up we have Exxon. So this, we are playing the price of crude. Like, crude looks pretty overpriced here right now, right? But look at these mega time frames we're talking about. Back from 2007, 2008. Massive downward pattern. Pretty consistent too. You can see, like, this is a big time frame, guys. Like, huge. We had this, like, spillover period over here, you know. Right now it's at like $60. This is the price Exxon needs to make like good money. But yeah, basically what I'm playing here is, yeah, green energy's around the corner. Yeah, we had the electric vehicle market hype and the solar power, the TAN ETF increase, like substantially. But like everyone's missing out that like everyone still uses gas in their homes. Not everybody, but a lot of people. Most people still use gas to drive their car. Airplanes need gas, the ships to transport materials, and goods need gas. With all the, like, you know, a lot of things need this product anyway. So it did fall very rapidly, but it did increase back up because it needs to be here for the companies like Exxon to make money, so we can all live the lives that we're living right now. And with Biden, the governor or president of the United States, you know, he's a big green guy. That's what he like imposes himself as. That's only gonna, in my opinion, increase the price of crude. I think it just has like an inverse effect. We're already kind of seeing that. Like, if you want these companies, like some solar company to do good, they're gonna give them like subsidies and stuff or whatever. But these oil companies are gonna be profitable because if you're like taxing like Exxon more, you're making it harder for them to do business. It's natural that the price of crude is going to increase, and then they actually just make some more money. I mean, is that like the best analysis? No, but it's how I was thinking, and so far it's been very profitable. I mean, we're up like a substantial amount in this company right now. We're up like 40%. Dividend yield's like 10. I think it's like 9, but it's close enough that right now we have. Let's see the percentage of the portfolio. That's 11%, 11.1, pretty good. Yeah, I just think crude's gonna go up higher. I don't know how much. Yeah, I don't know how much, but again, I just think it'll go up. Give it time. I'll give it a few years, because, you know, if I'm kind of doing this about like a time thing, so in about 3 years, I'm like kind of, not 3 years, but I'm obviously every few months I look at my analysis, but in let's say 3 years, I'm like, you know what, do I really want to be in Exxon? Do I want to shove it in something else? Because there will eventually be a point in the future when gas companies or oil companies like this, if they don't adapt, they're just not going to survive. However, we're in this, like, in my opinion, like 1 to like 8 year window where this is such a good investment down here that you just had to buy it, in my opinion. Or I had to buy it. We'll see where it goes. Right now it's been doing good. We've got a lot of dividends on the way up. I don't think the run's over. I think a big pullback is needed. Hopefully it doesn't go down to like 48, but that will be a big support area. Why is that big? What's that from? Gotta go way back. Yeah, that'll be a big support area, 48, just because that's this. I guess this, yeah, back from like the 2000s. If that's even relevant, I don't know. But yeah, that's why that is in here. So yeah, that's basically the portfolio. Most of these companies I'm holding for like a longer term. A lot of them I'm basing it on some type of commodity, whether it be crude, gold, silver, uranium. I guess we're also looking at the DXY just because it has to relate to commodities and purchasing power. Interesting little funnel. Huh. Yeah, the lower lower this goes, the better for our like commodities companies, but the higher it goes, that means that commodities prices are not decreasing. Yeah, they're decreasing in value because the purchasing power of consumers increases. Oh, Bitcoin fell. I don't have any Bitcoin, but that's a really interesting drop, and then a candle. Because I guess it opened up on the weekend. Wow. No Bitcoin in this portfolio, but I probably should. Yeah. If you guys are, interested in the things I'm looking at and stuff, though, I try to do a video a week just talking about some things I'm looking at. It's not like I'm an expert analyzing anything, but it's fun to look at and kind of share an opinion. But yeah, that's the portfolio. I think the main thing right now is the cash is just so low. 7% cash is just weak, but if I were to sell space, I'd have, let's see, 1, 3, yeah, I'd have like 13%, so that's a good amount. That's usually where I look to have it. But yeah, anyway, that's really the portfolio. Hopefully you guys enjoyed the video. Hopefully it was what you're anticipating. I'm sorry, I don't really want to give out, I guess, the numbers I'm working with. I'll give percentages, but I just don't want to give out the numbers. I like some privacy. Hopefully everybody could respect it, but if not, hey, it's okay. But yeah, thanks for watching, everybody.